There are a number of reasons to consider a contract for deed when a mortgage is unavailable. First off, the goal is to ultimately get a mortgage, but because of the tightening lending requirements, and especially after COVID-19, it's getting even a little harder to qualify for a mortgage. Minimum credit scores have been raised, and that's usually the primary reason that a contract for deed is considered is low credit scores. But self-employed folks have a difficult time getting a mortgage as well. In general, anyone who had a bankruptcy, foreclosure, short sale, judgment in the last few years, others that need to rely on seasonal income or part-time income, maybe there's a temporary disruption of income due to a medical reason, and then ultimately folks who are going to have a change in their income and expenses in the next coming months. For example, those who are graduating from college, getting a more traditional job with higher income. Those are cases where the mortgage world has very strict criteria on qualifying, whereas in a contract for deed world, we can be a lot more reasonable with those aspects. Down payment is a very significant piece of it, minimum 10% down payment. We like to see the bulk of that income come from the buyer. Sometimes there's a gift or equity from the sale of a home. And the contract for deed, like I mentioned, is very similar to a mortgage in that you get the homesteading of the property, you get the tax deductible interest and so forth. Usually better refer to your accountant for that. But it does have a few drawbacks as well. The recovery, if there is a problem with making payments on a contract for deed, is much faster than a mortgage in the state of Minnesota. A mortgage will take about 12 months to go through foreclosure, where a contract for deed cancellation will only take a few months. But a contract for deed is much better than a lease option, a right to purchase, a rent to own, where the buyer is really not a buyer. They're kind of a glorified tenant with just the ability to at some point purchase the property. Whereas, and again, a contract for deed, because there's a kind of a pseudo ownership element to it, the county will oftentimes recognize the CD buyer as a partial owner of the property. When getting out of the contract for deed, a refinance is used versus a purchase transaction. And refinances are a little easier to obtain than a purchase. A lot less criteria involved when you're refinancing something that you already have partial ownership in.